Hello, YouTube. Already entering the danger zone. Nvidia's closing below its 50-day moving average for the second consecutive day. We have inflation numbers coming out tomorrow, and we're expecting them to be hot, hot, hot. This would not be good because it would be the first time we're actually printing a higher high 2 times in a row on our headline CPI, which is what everyone's saying is the reason for the soft landing. And a very scary thing we can look at here is the 1960s to 80s compared to now, where if we start seeing a reacceleration in inflation, oh my goodness, could this get painful? How painful? Well, let's go back to Nvidia and try to understand exactly what that could mean. Two daily candle closes below did not lead to a decline last time, but at a certain point, we tap that support. And this volume right here tells us that people have been more excited to sell than they have been to buy. I am very, very, very mindful of this. I'm also mindful that we're still pointing up on Nvidia on a higher time frame, including a weekly chart and a monthly chart. But the market takes a staircase up and the elevator down. So if we're about to go down on the elevator, isn't it nice to get a warning? Isn't it nice to know we're entering the danger zone? Isn't it nice to know we should be at least a little bit mindful? Yes, so stay tuned, and I'm going to tell you everything you need to know to get ready, not only for tomorrow, but for the rest of the week and the rest of the month. I think we have a great show for you prepared today. All right, so if we do not hold that higher low pattern, which right now all it takes is us falling below 442, like we're not that far off of it, we could go all the way down by $150, all the way down to roughly 300, which is where I would expect very strong buying. We have this 200 DMA, we have a gap fill, and it would be a nearly 40% decline off the top. That is a big, nasty, nasty cut. And how could this happen, Justin? Well, let's look at the weekly chart. We could crash land back at support at about 400 and not holding that, it could be headed lower. If we look here to a 12-month chart, I want you to keep in mind the headline we talked about yesterday where we're talking about NASDAQ 100 drops as Apple and Nvidia see second worst fall. So we're going to look at Nvidia, but the star of today was really Apple. So we're going to go back and talk about this Apple event a little bit later. Their Wonderlust. We'll see if there was any wonder, and then we'll see what happens here. Why? Let's look to Apple on a 12-month chart. Why does this matter? Well, it matters because we lost our 2022 and 2021 highs. So now that we're back below it, that's a fail. It's a failed breakout. We're not going to know for sure this is a failed break until we close out the year, but this is a massive warning. And we look here at a name like Microsoft, it's below. A lot of names are not quite there either, like Google. Google is not here. So leaders lead and followers follow. So if Apple is the king and it's one of the leaders and it's already fallen back below on a news event, which we told you yesterday is likely going to be a sell because it's almost what always happens. If you've watched enough Apple events, you know it's usually a sell to news. But if we look here to Nvidia, oh no. What is that? Well, that's about 346, and we got about 300. So if Nvidia only does what Apple already did and comes back down to its 2022 high, man, that's going to hurt. That's going to be a big drop. That's what I'm looking for. That's where the gap fill happens. That's a negative 40% decline. But not all is for nothing. There is still hope. But before we go further, I want to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would really, really, really appreciate it. And I'll thank you ahead of time because you guys have just been such a good community. I really appreciate it. So that's what it really comes down to. I don't want to put a scare tactic saying, oh my God, Nvidia is going to tank. If it starts sliding more, then I might make that video. That would likely happen on a weekly lower low, which we already have. But we still have support here at about 420. So if Elon's watching, please send it, right? Send it. We need to go higher. We need more volume. We need to see what's going to happen here. What I want to do now is I want to go through a couple of headlines because I want you to be very mindful that there are some things we can do right now to be prepared, but I want you to watch till the end of the video so we can have the context from the weekend to go through these news articles and really understand what could happen here. So thank you very much for tuning in. Let's move on. Your time is valuable. So core CPI could rise. We note that ever since we formed a high and people said that, right, disinflation is coming. Well, yeah, lower high, lower high, lower high, lower high, lower high. Okay, maybe this is an anomaly. That's what people said. Maybe it's not this time. They've been coming in lower than anticipated. So even if it comes in lower or meaning green or red, I don't really care. If we get higher than 3.3, that's the start of a trend. It could be a fake out. It could be a dead cat bounce where we go down, we dead cat bounce, and then we go down to the twos. But this is called the last stretch on inflation. It's going to be the hardest mile. And if it starts to reaccelerate, it could be really bad. The stock market did not so good during the 1970s. Paul Volcker is what we're trying to avoid, right? That's what Jay Powell doesn't want to do. We're right back here to neutral as well, which means, hey, fear usually comes all at once. It usually happens fast. It happens dirty. We can note here that energy's up again one more time. Again, I've been noticing that at the pump. Everything else is a little bit red, notably tech. Apple down 2, Microsoft down 2, Tesla down 2. It's not looking as pretty as it was not that long ago. Pretty red here. Apple, Nvidia. Read the headline one more time. Right, Nasdaq slumps with Apple in focus and Nvidia. That's what it tells us right here. Reality is creeping in on the Nasdaq's year-long dream rally. Nasdaq 100 as Apple and Nvidia see second worst falls. Active funds take big positions despite elevated bond yields. That's really important. Why? Well, tomorrow when we get that inflation print, we could see the 10-year note move. Why does that matter? Well, it matters because we're within a whisker of reclaiming that 4.3 area on the 10-year note, which for me would be a technical breakout. So if we get a weekly close back above 4.3 right here, or an update to this crash signal, I don't like that at all. It led to the crash of 2018, which is when Jay Powell was also at the Fed, and the crash of 2022. So if we see these W's on the chart, it means a win. We broke out here in January of 2018. We broke out here in February of 2022. And those happen to correspond with pretty nasty cuts on the S&P 500. We go back here to 2018. That's Jay Powell right there. In 2 weeks, we dropped 10%. So we went from, we dropped roughly 10% in 2 candles. That's bad. That's negative 10%. So that's a pretty big cut. I'm not sure that's what's going to happen now. We need to see that 10-year note break out. But if inflation starts to creep higher, I could see this thing actually going for that claim of 4.3, which could lead to a decline in the market. Here it was 20% too. So there's a 20% decline starting in March of 2022. I don't like this. I don't like that our leaders are leading to the downside right now. Again, if leaders lead and followers follow, well, we need to see the leaders lead first. They're down by more than 6% apiece. And then we're going to see the followers follow. I don't like that. This is also telling us that something is very unusual here. We don't usually see big tech go with a 10-year note. Something is extremely funky here. And it's really hard to get my mind behind what could happen if it's not just active funds taking big positions. What are they doing? They're chasing yield, right? They're trying to performance chase because they've been underperforming so far this year. So I want to show you one more thing here, which is this graph. We looked at this yesterday briefly. And the reason why this matters for me is because, well, we just said that leaders lead and followers follow. Well, the Magnificent Five, their revenue and profits versus GDP growth is not good. Right? Look at GDP. It's still positive. While their revenue is barely growing anymore. It's just above zero. But their profit, man, it's down to negative. So without share buybacks, I'm not so sure these stocks would be commanding the same premium they do. Let's look at a different way of trying to slice this data. We're going to go here to another heat map from FinViz, and we're going to go here to current PE and forward PE. So if it's red, it means it's expensive. We're shopping at Whole Foods. So we look down at the grid over here. 30 is high. 50 is normal. 20 is elevated. 25 is getting rich. 30 is expensive. What's cheap here? One more time. What's cheap here? Energy, banks. Everything else looks pretty expensive. Okay. The market is a future discount mechanism. So what does the future look like? Okay. It's cheaper, but it's still pricey. Apple's at 26. Nvidia at 26. Apple at 26. A lot of 26s here. They're still commanding a premium versus the market. So we better make sure we understand what we're buying. Tesla at 57, Amazon at 45, sorry. We have to make sure we understand what we're buying. This is really, really, really important. And it's really important because if we're entering the danger zone, it could be nothing. It could be a flush wound, or it could be a lot more. So what did Apple actually tell us today? And then we'll look at a Bitcoin article, and then we'll circle back and try to leave you with that plan of attack going into here. So I did not actually have a chance to watch the event today, but all I want to look at is what are the headlines here. So what's the headlines? Okay, cool. What do we got? Let's go to the bottom. Tim Cook says Apple Vision Pro on track to ship early next year. Cool. Okay, what else? Watch Series 9. Okay. They launched the Apple Watch Ultra 2. Cool. Am I buying it? Nope. I got the Apple Watch 8. I don't care. Apple announces a ban on leather products. Okay. It looks like they're going after the ESG or their carbon footprint. All right. I like leather, but I understand the reason why. Apple makes the iPhone 15 official. There you go. It came out. The iPhone 15 is here as a USB-C charger. They're ditching the lightning cable because of the EU. We can also note that they've unveiled the iPhone 15 Pro with one price increase of $100. So there is even inflation at Apple, right? There you go. Unveils fastest iPhone chip ever. Cool. Apple keeps iPhone pricing the same with one exception, that Max is going to $11.99 now, an extra $100. Apple stock dips as iPhone event concludes. Okay, so sell the news. Cool. All right, that seems pretty simple. We already talked about Nvidia yesterday and Apple as well. It's kind of what we were expecting. And now we look here and see that, so another headline here. I'm just going to cover this really fast because I'm just reading it as it's crossing here. Looks like Oracle actually had a big decline here. The headline from Bloomberg says, Oracle plunged the most in 21 years after reporting a slowdown in growth in its cloud business. Okay, that seems interesting. And then finally to wrap it up here. So if we look at these names, Amazon, Microsoft, Nvidia, that's what they're overweight. 80% of fund managers report that they are overweight since June for these names. We just showed you they're very expensive. So are these guys smart or are they dumb? They say smart money is hedge fund managers, but man, they don't look so smart right now. If we take the elevator down, I think they're going to be rushing for the exit. And then one more headline here, because we've been looking at Bitcoin for the last couple of days. And if we have a look here today it's rallying. Looks good. Let's look at that date on this article and let's read what it says. So the article is from August 23rd, which is about 3 weeks old now. And it tells us Bitcoin's rival Ether's perilous chart outlook adds to crypto gloom. Digital assets suffering their worst month since November of 2022. Technical signals suggest more Ether declines despite ETF height. And we did get that ETF height. Since when? Since the 23rd. Let's look on the chart and see what happened here. So here's the, right, there's the big drop. So we got high, lower high, lower high, lower high. So we got lower highs or a downtrend, a descending triangle, because we have a flat bottom and we have a descending top. That's a descending triangle. So we look here, August 23rd, article's published. It's right here. So it's a little bit of right, hopium. What happens? Form a failed W. And since the 23rd, we're actually right back to where we were. We haven't gone anywhere. So death cross is forming. That's not good. We look at Ethereum. It's down more. So 23rd is right here, and we're lower. This is at 1650. Now we're at 1600. So death cross happened earlier. We're not going to see that same death cross happen on SPY right away because you can see the 200 MA is just so far down. But that's kind of the warning, is that crypto has led a lot of the moves because it's the riskiest asset. It leads up, it leads down. Tech is already leading us here. The riskiest asset or Bitcoin is already giving us some warnings. Ether's down more. So, all right, you've told me all this stuff, but just tell me what I need to do, Justin, because you've told me all these reasons why I should be scared, but now you're probably going to tell me something different. I'm going to tell you that it's not time to be scared. Why? Because what you first of all need to understand is whether or not you are a trader or an investor. So if we look here, if we're looking at a chart, even though I'm looking for a potential 10% decline to about 413, I think we're going to crash line on strong support. That's why I'm bearish. I'm bearish because I want to go to the discount store and I want to buy Whole Foods groceries, but I want to pay Walmart price. I don't want to pay full price. I want cheap. I want a discount. And that's what I'm looking to get. So right now, we have 4 higher lows as of right now. Sorry, 1, 2. Yeah, we got 4 higher lows as of right now and 0 higher highs. What does that mean? It means the bulls are playing defense. We're still pointing up, just like Nvidia. But again, everything is bullish until it's not. It gets unwound really fast. We take the staircase up, boop, 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 elevator down. Is it going to take the second elevator down like we talked about? All right, let's look at even one higher time frame because I've been mentioning this to our group. I mentioned it for almost a 1-hour private stream today. If you want to see what that was, just join us at thealgo.com for 14 free days, risk-free trial, and you can see exactly what I do. I even purchased a stock today, and you can watch that 1-hour clip I shared because I've been thinking about my retirement account versus my trading account. So my retirement account, I'm buying more right now. I mentioned on the weekend I bought 4 more stocks. I bought another one today. I'll probably buy more. Why? I'm not scared. I'm not scared because I'm 35. I have a long time in this market. And I'm noticing this pattern that if it plays out, I'm going to regret not being long going into here. However, if the chart breaks down and I'm wrong about this pattern does not hold like I'm looking at right now, I have more room to add to my dollar cost average account or my retirement account. I like discounts. So if it gives me more, I'll be happy to buy them. However, for my tactical account, which is my investment account, if we lose the monthly low, I'm stopping out. And then I'll have to reassess going into October. I think this pattern is still intact here. I think we're going to get some discounts presented. If we go down to between 433 and 435, that is where I get most excited, about 10 points lower. At the beginning of the month, I was calling for a crash. No one wanted to believe it last month. They still don't want to believe it today. Well, we're already more than half of the way there. We need 10 more points. We're already 15 points off the high. We hit about 460. So if I'm looking for a total of about 25-point decline, and we've already done 15, like what's another 10? Really, what's another 10? So what you have to really figure out is whether or not you are an investor or if you're a trader. If you're an investor, you should be excited for the opportunity to buy in the dip. You should be interested in looking at other companies that are providing discounts. But if you're a tactical trader, you want to make sure you're very aware when the trend changes, because we have consolidation on the monthly, we have consolidation on the weekly here, 2 inside bars, and we're push pulling off the 50 DMA. I think there's a coil that's getting tight, and it could explode. It could explode higher too. I could be wrong. But we got one daily candle close back below. We talked about Nvidia closing below for 2. Well, if we close back below there tomorrow, that would be the second day for SPY again. It might be a false break, but it might not be. And we looked at QQQ, push pulling here as well. It's push pulling off at 375.66, or our mathematical number at at the 70% retracement. So with that said, I think you want to really be careful going into tomorrow. Our weekend videos now queued up here on the left-hand side, which should provide a deeper analysis. But like I mentioned, if you're interested, what do you have to lose? A 14-day free trial to see exactly what's in my account. Hang out with me pre-market tomorrow. Ask me questions privately, and I will be happy to answer. If not, thank you very much for your support, and I look forward to seeing you tomorrow. Thank you again.